Okay, welcome to the next video segment here for the swing trading course. What we're talking about now is the power of candlesticks, or just using candlesticks for technical analysis and swing trading. So what I'm going to do is focus on explaining what candlesticks are, why I want to use them, my three highest probability formations, and talk about maybe quickly candlestick and confluence zones and stops. All of that may be part of a separate video. I don't know. It depends how long this video goes. Important to note is that I will, over time, probably break this video up into separate things as we want to go into more detail on each of the different things, the different 5 points here on the menu. So first of all, what are candlesticks? Candlesticks, if you've never used them, it's simply another way to display intraday, daily, weekly, monthly, or whatever sort of time frame you like to use price action. It doesn't really do much more than that in that sense, but it tells us a lot more. I'll get to that in just a second. So they're similar to bar charts, but a lot more powerful. And they originate from the Japanese rice traders. They've been using it since the 18th century. So, in other words, it's been a proven method that's been around for a long time, and hence certainly worth using. It's very very visual. For us as human beings, tend to be very visual. It helps to have something that gives you a lot of information that you can detect with a visual aid, as opposed to just looking at a number. And so it makes it very, I'm going to use, for lack of a better term, easy to spot certain patterns, some of the highest probability ones. So here's a quick comparison of a non-candlestick chart. This is a line chart on the left compared to a bar chart on the right, a candlestick chart, excuse me, on the right. And for the untrained eye already, if you've never used this, you should see there's a significant difference. It's the same chart, the same time span. I'm just showing a different chart, and you can see, for example, if you could look at the bottoms here on the downtrend that happened in the chart, it's significantly more choppy, and rustic is, I think, a good word. Someone described it to me as rustic a while back, and I thought it was a great fitting word for looking at a bar chart, but at the same time also a lot more information. So we'll look at that in just a second. So here's a candlestick. If you've never seen them, what they look like is this. You have the filled bodies or the empty bodies. On my charts that I'll use, you'll see them being green and red as opposed to filled and unfilled, but essentially the ones that are red in my examples, or usually filled on most candlestick charts, those are the negative candles. In other words, you have an open and a lower close, but within that day you will tend to have a range that goes beyond the open and the close, and that's the so-called tail or wick or leg, whatever you want to call it. I tend to refer to them as tails. And these tails are very important. The longer they are, the more important, in my opinion, the candle becomes. And then the candle on the right is, of course, an up candle. In other words, you have an open and a higher close, and again within that you have a range that extends, of course, beyond the open and close. A lot of times, not always. Sometimes you get an open here and a close at the top, right? But on average, it will tend to have candles tend to have a little bit of a tail on either end. Next, why use candlesticks? Like I just said before, it's all about understanding that they are much more visual than bar and line charts, and so give us a lot more information. What they do is display price action and investor sentiment and footprint. So what candlesticks do is essentially by the visual aid of a candlestick, by the type of the way certain candlesticks look and where they occur on the chart, maybe at the bottom of a trend or at the top of a trend or something like that, will speak volumes about not only the price action but also, of course, investor sentiment. You can very clearly see if people are stampeding out of the stock intraday or within the week or within the month or whatever the time frame is you use a chart in, the candle in. And so you really can see the footprints of investors quite clearly. Footprints that can otherwise only be difficult to detect with a series of indicators of momentum and sentiment. And instead of using a thousand different sentiment indicators, I think candlesticks, at least for a swing trading perspective, offers a lot of information on just one chart. And quite frankly, most of the time in my 14 now or 15 years of professional trading, have been more accurate than most other things that I've seen. Continuous formations are key. Candlesticks tend to occur not just with one candlestick, but sometimes there's a series of candlesticks one after another that give us a great setups and hence form important formations. So it's decision making without emotions, and that's really once I started using candlesticks, and I can't imagine not using candlesticks right now because it's so amazing how my profitability as a trader and my literally using emotions simply washed away from my trading. Ever since I started using and fully understanding candlesticks, trading with emotions has literally left the window, and because there's no need. You see exactly what you need to do based on some of the most important candlestick formations. And that's the other thing, is defined risk. You have very clear stops on at least some of the candlestick formations right off the bat. There's nothing to do. You automatically know where the stop should be. So there you go. Now I'm going to go a little bit away from this PowerPoint presentation I made, but basically the three highest probability formations I know are the shooting star, the hammer, and the outside day or the engulfing candle. And the hammer is the first one I'm going to talk about. You can see here it's got a long wick or a long tail at the bottom and a small body. It doesn't matter whether the body is filled or not filled, or in my case, you'll see in a second, red or green. The important thing is the long tail. So hammers examples I'll show you in just a second. You want to wait for follow-through buying though when they occur, and they occur at bottoms. So let me get away from the PowerPoint here for a sec and show you the charts. So again, to reiterate, the candlestick that we're talking about here now is the hammer, and the hammer looks just like the one down here. This is what I call a hammer. Let me maybe draw that in a little bit. I'm going to try to use a bit more of these arrows. So this is the hammer candle, and essentially what you have is a very long tail here and a relatively small body. Now when they occur at bottoms, or what look like bottoms, they are very, very, very important. You can see this stock actually has a lot of them under Armour. Sometimes they work, sometimes they don't. But I will say on average you will make a lot of money using them. There's no doubt about it. What you want to see though with a hammer, you want to see follow-through buying. And the hammer follow-through buying doesn't necessarily have to occur the very next day, but it does have to occur within the next, say, 10 days or so at the latest. In this case here, we got a follow-through buying the very next day, and my entry point would have been at the end of that very next day. And you see, over the course of the weeks here, of course, it would have been a tremendous trade. So the hammer, and we will talk about these setups a lot in our webinars, and we do talk about them a lot in our webinars, I should say, in the swing trading course, subscriber-only webinars. So, this is just a sort of an introduction to kind of explain to you what the most important candles look like. But this is a very important one. You see it showing up at the bottom. And the entry point in this case is at the end of the confirmation day. So you get a confirmation day, and the next day, at the end of the next day, I would have bought this stock, and I actually did.